Welcome back to this Moneycontrol live stream. You're watching Closing Bell with me, Nandita, Khemka.
And hello there, I am Yatin Mota.
Well, Yatin, traders and investors will be heaving a sigh of relief given the kind of recovery that we saw today. Of course, yesterday it was a knee-jerk reaction. We saw the biggest fall in 4 years, after the shock verdict, in the elections. But today, we've made a very good rebound. In fact, I think we are back to where we were pre-exit poll, right?
Absolutely.
The Nifty is somewhere around 22,600 right now, so 3.5% kind of an uptick coming in there. The sensex also 2,300 point up move. But the recovery is more pronounced in the broader end of the markets. I think the Nifty mid-cap index is up 4.5%. If you look at the advanced decline ratio, it's at 3:1. And the India VIX, Yatin, has tumbled by 30% today. Remember yesterday it saw 40% uptick at one point in time, but today that has crashed 30%. Sectorally, all the sectors were in the green, led by the likes of metals. That index, rallied somewhere around 5%. You had autos. That index, by the way, hit a fresh record high today, Yatin, in excess of 5%. FMCG, yesterday that was the lone survivor. Today as well, it has built on those gains, and stocks like HUL, Nestle, Tata Consumer have seen a fairly good run. But interesting to note that Adani Group stocks have also staged a bit of comeback after 20% drop yesterday. So Adani Ports, top Nifty gainer, IndusInd, Hindalco, Hero Moto, UPL, M&M, these are some of the other movers. In fact, I think we don't have a single loser on the Nifty 50 index today. So that's that. But what about the broader end of the markets? Defense stocks are still under pressure, right?
Yeah, so yes, selectively PSUs are under pressure, but look at the advanced decline ratio, almost 4:1, and this was exactly the opposite on the opening trade. So the first half an hour, 1 hour of trade was slightly nervous. Through the day, we staged a linear recovery. So it's not that we spiked in middle of the day or something of that sort. I think gradually the market moved and tried to close at the day's high, almost 750 points up on the Nifty. If you look at the mid-cap index and the small-cap index, were down 10% each. Today managed to recover almost 4% each. Now, in the Nifty 500, the gainers were ABFRL, stock was up 15%, Idea was up almost 12.5%. So the Birla Group stocks are doing well in trade. So are consumption stocks, something like a Jyoti Laboratories was up nearly 15% in trade. Imami was up 11% in trade. We had those smaller rural lenders also, like Credit Access Grameen doing well. That stock was up 10%. Karur Vysya Bank was up 10%. RBL Bank 10% up. So the smaller banks and probably smaller financials were doing well. What was not doing well is the defense stocks. Top 5 FN losers are from the defense and railway space. BDL, GRSC, Kochi Shipyard, all of these stocks down anywhere between 7 to 10%. Titagar Wagons, SW Solar, Paytm are the other losers in trade. So yes, the broader market is slightly under pain, but clearly the large caps have staged a strong recovery. And as Nandita was mentioning in her opening comments, we have the exit poll levels which have come again on the index, which is a good thing after yesterday's mayhem and volatility.
Right, I think you pointed out that the pain is still there in the mid and small cap end of the market, but it's the large caps turn to really perform now, right? And that's what some of the brokerages have also pointed out, that the risk reward is much more favorable when it comes to large caps. Tell us what our global brokerage is saying about Indian markets after yesterday's crash.
So Nandita, instead of discussing stocks, I thought that we'll discuss more on elections because that is what the people want to know rather than stocks, because some of them already own some mutual funds and stocks. So CLSA believes that the kind of volatility that we have seen obviously is because of the election verdict, which was unpredictable. However, they believe that they could see some valuation support for FMCG stocks. Private banks also are preferred on the basis of valuation. They have replaced L&T with HCL Technologies in their India model portfolio, simply to do with the fact that in this uncertain time you need more defensive stocks in your portfolio. So they've moved to IT stock like HCL Technologies, private bank, IT, insurance, commodity. These are the 4 preferred sectors wherein CLSA would like to bet some of the money. In fact, they have limited exposure to Modi stocks like ONGC Reliance because they have re-rated in the last 6 months. As far as discretionary and capex space is concerned, there could be some shuffling of portfolios, but clearly the preference of CLSA is in private sector banks, as I mentioned earlier. Morgan Stanley believes that the BJP falling short of majority doesn't augur well for the markets. There could be some medium-term pain, but doesn't really change their overall target and scenario. In fact, they see that the direction or the pace and the reforms could not slow significantly. They believe that the macroeconomic conditions and the discipline by BJP will be maintained when they form the government. In fact, they say that the government needs to focus on macro stability, and obviously the base case is that BJP-led government is unlikely to sacrifice any of those macroeconomic policies that they have been standing by for the last 10 years of their rule. So yes, the markets are hopeful that a stable government will form. Obviously today we had updates on general news channels that PM Modi is all set to take oath as PM on Friday or a Saturday. So probably that event will happen this week. The cabinet formation, and after the cabinet formation, the budget which will come in months time will be important to watch out for.
Right, and hectic parlays are on in the national capital, right, to form a government as well. And since so much is being talked about, the consumption side of it, and consumption stocks have also once again returned to favor. I thought, why not speak about the sector leader HUL, right? Because yesterday, remember, on a day when the Nifty was down 6%, HUL was up 6%. And interesting to note that on a YTD basis, the stock is still in the red, 2% down or so. But today, on an intraday basis, it witnessed its biggest single day gain since April 2020, right, in 4 years, and it has rallied as much as 10% in the last two sessions. Of course, we've seen a lot of reallocation of funds into defensive stocks, as Yatin was mentioning, IT, pharma, all of them. But of course, consumption or FMCG being the biggest sector that has seen a move because of the fact that yesterday it was up 0.5% on a day when the Nifty and sensex were down 6%. So Jefferies has upgraded the stock to buy, and they have revised the target price higher to 2,950 rupees, which implies an 18% upside from yesterday's close price. In fact, Jefferies has pointed out that the government may adopt more favorable policy towards consumption, and especially to alleviate stress in rural India, right, and focus on consumers in the rural India. Aside of that, Yatin, we already know that IMD has forecasted an above normal monsoon forecast, and consumption stocks were anyway gearing up for an up move because of that. And a lot of these FMCG companies have guided for better volume growth going forward. So this has come at a time when things were already starting to look up, especially since the fact that we've been waiting for a recovery in rural India for quite some time, and now things were just about taking shape. So now of course consumption stocks have come back in favor because of that, and also the fact that now that there'll be a coalition government at the center, so things will be much more populistic or welfareistic going forward.
I think two engines for the FMCG or the consumer space. Number one is a normal monsoon or a good monsoon this time, and number two, given the fact that the BJP has not been able to do a standalone majority, welfare schemes will be a priority of the government that will boost rural economy. So two engines probably that could drive FMCG stocks and consumer stocks, and probably that is clearly showing on the prices. Yesterday also FMCG stocks gained, and today also good amount of buying seen across large cap as well as mid cap, small cap, FMCG and consumer names.
Well, with that, I think we are ending the day on a pretty sanguine note in comparison with what happened yesterday. It was a fairly grim, I mean, that's a very, soft choice of words. But today we are in a better mood, and let's hope that we can only build on gains from here. But with that, it's a wrap on this edition of Closing Bell from me and Yatin. Thanks a lot for watching, but stay tuned to Moneycontrol for all your other news and updates.